I think one of the things that was really key to look at was the VIX. Now, the VIX, I'll tell you what it is. The VIX is an instrument that tracks the short-term options, the 30 days from expiration options of the SPY. That means it's a representative of implied volatility of these options in the near term within 1 month. When the market goes down, typically volatility increases. It's the fear index. That's what it's measuring. Implied volatility is measuring people's perception of where the market's going to go, how volatile it's going to be. And what's interesting is that the VIX can set up levels itself. One of the key levels that it set up here was going back to July the 2nd. Now, on July the 2nd, we had a short term, right about here, we had a short term market all-time high. Of course, we've broken it now and gotten volatile from that, but that was July the 2nd. It was a Friday a few weeks ago. And so at that same point, VIX made not an all-time low, but a low for the year. We had a move up on the VIX from there that basically created a support at 16. This becomes very important because if you look over the last several weeks from the 6th of July up until even this very morning, it has held that 16 level. And then what becomes very interesting is when you look at this in comparison, let me make this where we see the extended hours, makes it a little bit clearer. Today, once we hit that 16 level right at the open, about 9:30, was basically where the SPY actually topped out as well, and then reversed off of that. And if you look at some of these other points where the VIX down here was at a resistance, there's resistance based on the wider move from the low of the VIX up to the high that it set on this down move of the 8th of July. It hit it and held it as support. And so this key level here with the SPY also matched up with a key level of the VIX. That's pretty cool. And you'll see that at the times where it hit the level, the last all-time high, VIX hit 16. That was on the 14th of July. Then again, the all-time high before that, on the 13th, was where VIX was bouncing up against this support. And so if you're looking at the SPY, if you're trying to trade the SPY, you have to look at the VIX too. It can give you these key timing levels because, if we're looking here at the SPY, like why did it top out right here? Well, it's not at my favorite 50% level. Maybe it's at a 68%. Maybe it's at a moving average. I don't know. But the VIX was at a level. And so when you get to these points and you see this confluence of both the VIX, the volatility, and the SPY, that's when you need to react. It's a very reliable thing to watch for. And so if you're trading the SPY, you really have to look at the VIX. It's a great tool for that.